Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about mortgage rates. Why haven't they dropped since the Bank of England cut rates a few days ago? Well, I'll tell you in this video exactly why that hasn't happened and what's the expectations on mortgage rates going forward, because at the end of the day, we all want to get cheaper mortgage rates because that makes a big difference to our monthly payments. And if you're a buy-to-let investor, it can be make or break on if you can keep the property, and that can be profitable. So we'll talk about why we haven't seen big rate cuts from lenders since we've had that, and could that change next week? Could we be about to see some lenders cut rates? We'll talk about that as well. Before we jump into this, if you're new around here and you haven't done already, do make sure you smash subscribe over there and hit that bell notification. By subscribing, you'll get all the latest house price news, interest rate news, and much, much more. And one quick favor from your side, make sure you smash like, tickle like, do something to that like button. That does really help with the YouTube algorithm. That pushes more people to the channel, and that's your part to help the channel grow. So thanks to everyone that does that. So if you're new around here and you're thinking, what is this guy doing? Where is he? Well, I'm walking around a field. We're staying in Carcassonne at the moment, or outside of Carcassonne, and we've been here for 2 weeks. This is some of the fields that we've got here that I've been having a look around while making you guys some content videos. So if you watch the channel on a regular basis, you'll have seen some of the updates that we had while we've been in France. So one of the updates that we did, I filmed it yesterday, I don't know when you will have watched it, is that the Bank of England finally cut rates again. And those of you that watched the channel for a long period of time, which I saw in the comments was quite a lot, watched last year. I was also in France last year when the Bank of England cut rates from 5.25% down to 5%. And so this week we had a cut from 4.25% down to 4%. Now, what was interesting in that data was the fact that the inflation data is expected to go up considerably. You see, all forecasts have said that the inflation in the UK for 2025 would sit around 3.5%, 3.6, 3.5, somewhere around there. But that's been changed. And a lot of that's been changed due to energy costs, due to car vehicle excess. That's one thing that's put it up. Water rates going up, that's going to help push the inflation up as well. And so the inflation data is expected to peak out in September now at 4%, a massive 0.5% more. Now, a lot of the things that are going to go up over that period are energy, but more importantly, food. And food makes up a big proportion of people's outgoings on low income. So poorer people are going to be unfairly hit and find it really, really hard when this hits. And so all this inflation is mostly supply side. And that means that it's nothing that you or I can control. I think the Bank of England now has realised that maybe keeping these rates too high isn't really helping. So they've cut the rate to 4%. They're saying that means it's still restrictive, meaning it's not good, it's going to slow down spending. And they're talking about the fact that consumers are spending significantly less than they need to. They're trying to save money at the moment. And so when the Bank of England cut rates, you would normally expect lenders to rush in and cut rates as well, because they've got that ability to do that, but they're not. They're sitting there and holding at the moment. And a lot of that is down to the fact that a lender that you borrow from, HSBC, NatWest, Santander, somebody like that, they borrow on a rate called the SONIA swap rate. And that's a prediction on where the Bank of England rate is going to go to. And those predictions were that the Bank of England would cut. That was there for weeks. And so because of that, a lot of lenders did these cuts prior to the Bank of England doing their rate cut. So in the last few weeks, companies already cut their interest rates. So they've been ahead of the curve. And so now they don't need to cut anymore because they already cut where they're going to be able to cut to. Now, what could push them to cut even more is the SONIA swap rate predicting another cut with the Bank of England, and hopefully that happens and we get another cut, at least one cut more this year. Or what could happen, like happened last year, is the market could just really slow down. And so we've seen that before. So last year, transaction volume plummeted. It was really, really quiet. Lenders needed to get the market moving. And so how they did that was by cutting rates. Even before the Bank of England cut rates, you could get a rate. The Bank of England was a 5.25%. There were lenders lending last summer at 3.99%, which was a really good rate back then. And so they did that to get the market going again. And it did do that. It got some momentum going in the market. It got things moving along nicely. And that really did get some momentum. So if the market stays slow, this is what I'm saying. If the market stays slow, the transaction volume stays low, then you could see lenders cutting rates. But right now, they're not looking at that. It could change next week. It could change next month. But right now, I'm surprised at how few lenders reacted to the Bank of England cutting rates and got some momentum and got some rate cuts out there. They're just sitting and seeing what happens. Now, they've also got a slight advantage here, because what's also happened is that the government has pushed the Financial Conduct Authority to relax some of the lending criteria. So that's meant that there's a few extra people that will start coming into the market once they're aware of this, and they can borrow more money, more times their salary. They can get more 100% mortgages, and these sorts of products are out there now. But what needs to happen is more awareness of those will happen. Once that happens, you might see more people applying for mortgages in the next few weeks and months. Who knows? It depends really on if the banks, the lenders, the government, the FCA can get the message across on what they did, because not everybody knows that they can borrow more money now. But if they did, I think that would bring more people into the market. So right now, I think you're not going to see many lenders cut this month. I think this month's going to be more of a wait and see, and that will probably run through till the end of September, until we start getting more rumours and hints and people implying that the Bank of England is going to cut rates more. That might bring lenders to make some action and bring rates down. If it does happen, and it looks like the markets are predicting more rate cuts, the SONIA swap rate will drop, lenders will get a better margin, and they can lose some of that margin in order to give you a deal. Let me know what you think. Do you think we're going to suddenly see lenders next week cut loads of rates? Why haven't they cut rates, really, since we've had this Bank of England cut the other day? I'd like to know your thoughts in the comments below. And if you haven't done already, I've said it a few times, make sure you grab our new ebook. It's how to get the best mortgage deal in 2025. We'll help you find the best broker. We'll help you cut the time down getting your mortgage. We'll teach you how to find off-market deals that you can't find on the comparison sites, and much, much more. It's a free ebook. You just put your name and email address in below and you get that in seconds. And check out all the other content as well on the channel, including this video right here.